Hi, everyone. Welcome to Grab Your Keys. I have Jack Wang with me today, who's going to be speaking to us about how to lower the cost of colleges. I deal with so many families who are working towards paying for college tuition for one child, maybe four children. It is a lot in this economy to handle. So I wanted to get Jack to come on. So welcome, Jack, to Grab Your Keys.
Sue, thank you so much for having me on. I really appreciate it.
So tell us a little bit about what you do and how you help families with college and all that comes with that. There's so much.
Yeah, we have a couple hours, right, to record, so no problem.
Yeah, we
Um, so what families are mostly focused on, if you look at the entire college planning process, they're really focused on what it takes for a kid to get into the school, right? Get into college or what colleges they can get into. And obviously that's an important question. But what families need to think about earlier is how does aid play a factor, right? Because right now most families they think about getting their kid into college and then on how to
right.
pay for it. But that
As
really
a
shouldn't be the
mom of a 24 and 22-year-old, I totally get that.
Yeah, absolutely. So what I do is work with families all over the country on strategies on how to maximize aid to lower the cost of college and then on strategies on how to ultimately pay for it. But it really goes hand in hand with the admission side. So for example, so I'll just sort of give you this example. Around 2,000 colleges today do not require test scores to get in, right? So no SAT, no ACT, and that's a great stress reliever for students and families. I totally get that. But the reality is the vast majority of those schools still use test scores to determine scholarship amounts. And so families need to understand that, but it's not a question that's often asked. So there are schools where it doesn't matter, right? But there are schools where if you don't submit a test score, yes, you can get in, but there are no scholarships at all. So if you're a student or if you have a student who really doesn't test well, right, and it happens, right, no big deal. But if money matters, then you need to really make sure, okay, well, if my student's not going to submit an SAT score, an ACT score, and money matters to me, I got to make sure that this school is not going to penalize me in that way, if you will,
Right.
in terms of the dollars, right? So that's really a large part of it. So even developing that college list on what schools kids should apply to, there should be like a financial factor, and of course, certainly paying for college, right? There, a lot of people use savings, a lot of people use debt, but there's also a lot of other strategies, including tax-related strategies, that can be used. So it really runs the gamut, and it really goes beyond what most families think about in terms of this whole process.
So, in that process, that's undergraduate. Would you say that undergraduate is the same or different than graduate? Because people, from what I can understand right now, their children are, they have might even be able to pay for the 4 years. It's that other years that are killing them too. So, how does that work with regards to possibly postgraduate?
Right. So at the undergraduate level, most students are considered dependent, right? As much as parents might say, well, my kid works part-time job, makes money, whatever. Most traditional undergraduate students are dependent. So parent finances matter. And the amount of money that a student can borrow at the undergraduate level is limited. So the stories of, oh, I graduated college or like $300,000 of debt, that really doesn't come from the undergraduate level because it's not possible to do that, right? Any debt beyond a certain level that a student takes on really has to be co-signed by the parents, so it shows up on the parent credit report, as I'm sure you've seen, Sue, in your work. But the debt that really kind of makes the headlines are really from the graduate level. Now, that's good news and bad news. So at the graduate level, uh, students are considered independent for financial aid purposes. So even if they live at home, even if they don't really make other money, but once they hit the graduate level, they're considered independent. So parent finances don't count for the purposes of determining aid. Good. That in theory means that they qualify for more aid. and also at the graduate level, students can borrow whatever it is, whatever amount that they need currently under current rules. So if they go to medical school, dental school, law school, or just get their master's degree in advanced shoe tying or whatever, they can borrow all that money on their own. Now, obviously, parents can help with graduate level, but parents don't have to. I mean, they can choose to, but they don't have to. And so that opens up some opportunities for some strategies. But at the graduate level, parents do not need to take out the loan. So they can kind of keep their credit reports a little bit cleaner versus at the undergraduate levels, parents really need to get involved if students want to go to the more expensive schools.
Right. What are you seeing right now between people choosing the more expensive schools and like the state schools, and even state schools that are out of state are pretty expensive these days?
Right. So there's a really and this is really an effect that started well before COVID. COVID ended up exacerbating this effect. So there's sort of I think it's called the Pareto rule, something like the 80-20 rule. Well, in college higher ed, it's really like 90-10. And what I mean by that is the top 10% of all schools in the country. So your Ivy Leagues, your near Ivies, your public Ivies, all, the names that everyone knows, no matter where you're from, they get around 90% of all high school applications. Okay. So the demand is there for those schools, even though the cost is substantially higher because of the prestige associated. It really works like luxury goods or buying luxury real estate, like price.
Right.
It should matter, but really doesn't matter. It's really more about sort of the name or whatever, which means that the other 90% of colleges really fight over the remaining 10% of high school applications. And that's where price really matters. So, from that standpoint, this is sort of no wonder, like parents and students talk about the rising cost of education and having to take on more debt because these top 10% of schools have a lot of pricing power, right? Like there's not a lot of incentive for these schools to give extra aid to students when they can just pick somebody else, right? Who's ready, willing, and able to write the check, if you will. So there is that thing. But I actually read another study where it looked at just public schools. And the thing I hear all the time, and I live in Massachusetts, I grew up in Massachusetts, is I hear students all the time from anywhere in the country. Well, I don't want to go to my home state school because everybody from my high school goes there and I don't want to see them again or whatever. I understand it. It makes sense. My own kids said that. But this broader study looked at really where students go. And there's a lot of interstate migration. So essentially states just swap students. And because you're going out of state, you end up paying typically higher costs, right? But colleges love that because they get the additional revenue from the out of state students. So it's this really weird effect in the higher ed landscape where students really kind of go sort of out of state, right? Keep the costs high when they really don't need to go out of state. And reality is, the education you get at an out of state institution really is not that much different than what you would get at your home state institution, right? You're just paying more for it.
So what you're saying, the main thing that you need to think about is not where you go first, but what the cost is and how you're going to pay for it first, and then look at where the school is. So what do you feel the top 3 keys to people's success in your business would be?
So for families, it's really about what's important. I mean, you think about in a supermarket, there are people who swear by Kraft macaroni and cheese, and then there's other people who are more than willing to buy store brand. Okay. And what I'm not here to judge. Okay. That's not it. But some people really like being able to say, hey, my kid goes to blah, blah, blah school, get the bumper sticker, get the t-shirt, what have you. And if that's really important for the family, then, good for them, but you're going to pay for it. The reality is, and there's been tons of studies on this over the years, what actually matters is not the name, is not public versus private, it's not big versus small, Ivy versus non-Ivy. One of the most important factors is, experiential learning, whether kids get internships, co-ops, or undergraduate research to apply what they've learned in the classroom, because that also helps build the resume, right, for the
Right.
kids when they get out of school. So, and school and colleges really vary on that. There's some schools, every college in the country will say, "Oh yeah, we have internships, so you can apply for them. We'll help you get them." But there's many schools around the country that require internships as a condition of graduation, right? So that tells you that they're so much more serious about this. And in fact, there are schools around the country that are so serious about it that, let's say you get an internship, let's say at a nonprofit, right? But it's in your field, right? Like doing whatever, but it happens to be a nonprofit. So the nonprofit can't pay you. The school, at some of these schools, the school will pay you to go do that internship. Right. And a lot of these programs where they have this money, they'll pay for your airfare out to wherever you go and for your airfare back, right, at the beginning of end of that internship, because they really believe in that. And so, as much as we like to look at rankings and names and this and the other and kind of feed the ego, it's important. But at the end of the day, what ultimately drives success is not the name on the building. It's actually what the students do at the school when they get there, and if they take advantage of these kind of opportunities.
So that's one of the keys. What do you think the other two keys are?
So really, finances obviously matter, right? Because you want to be able to, in this world, so many people think about getting their kid to school and not through school. And I really liken this to buying a house, right? Like if you're looking for a 4-bedroom, 2-bath house, those exist everywhere, right? But people buy houses. You don't just look at the house, you look at the neighborhood and the commute time and whatever, right? And so what happens is a lot of families, they get fixated on the names, especially. They don't think about, hey, their student actually has to live there for 4 years and whether or not they actually like it, right? And so what happens is that if a student, I hear this all the time, student goes off to XYZ college first semester, finds out that they hate it, right? It could be too big, too small, too far from home, hate the food. That's way bigger factor than most people realize, or whatever, and they want to transfer. It introduces something called the transfer leakage, which is, oh, that math class you took at school A, well, that doesn't transfer to school B. Now you lengthen the time to graduation, and the longer you have to go, the more it costs you, right? So parents, and students especially, get fixated on the name, and they don't spend enough time really trying to figure out whether or not they actually want to be there. That's a second tip. And then the third tip is really just sort of about whether or not the student's actually ready to go. And this is not a judgment on a student's intelligence or work ethic or whatever. It has nothing to do with that. But what we're seeing is there's more kids today going off to college. Good, right? Further their education. Good. But what we're also seeing is that a lot of kids aren't necessarily socially or mentally ready for it. And again, I'm not saying anything bad, but they're just not used to sort of being in that environment where they're now much more responsible for right. There's nobody standing over them to tell them to go to class. I, for one, skipped a lot of classes in my undergraduate time. So, so some kids really can't handle that, right? And get drawn into like the party culture and whatever, and then they so it's not always a bad thing for students to take a gap year, work a little bit, do something else until they're a little bit more socially, intellectually, emotionally mature, and then go off to school. I think the outcomes would actually be a lot better.
Right. So right now, more than 50% of Americans have more than 50% equity in their houses. And I'm seeing a lot of people do cash out refinances to pay for college. Are you suggesting that to any of your clients to do that? Because they do have so much equity, and a housing loan that you can write off the interest is a lot less expensive than some student loans.
Right. So taking out whether it's a cash out refi on their mortgage or doing like a home equity line of credit, those are always options if the family has equity. But there are important things to weigh out. So for example, federal student loans, which is the first option people look at. because there's basically no credit underwriting criteria. So credit score does not matter. Income does not matter, right? You can borrow this money, and students can borrow some amount at the undergraduate level. I always recommend those first, not because the rates are the best, but they actually offer the most back end flexibility. So federal student loans offer things that just simply do not exist anywhere else in our society, which is the ability to change repayment plans at any time, right? No rhyme or reason. You just do it and there's no cost. So it's like if you have a 15-year mortgage, you can't just tell your bank, well, I'm going to send you a 30-year payment because I need the payment to be like, you have to refinance, right? You can't just arbitrarily decide that. But in the federal student loan world, you can do something like that. So it gives a ton of flexibility, also the potential for forgiveness. Private loans, the rates are similar, but they are fully underwritten. Credit score matters, income matters, and they generally don't offer the back end protections. But then when you get into things like cash out refinance mortgages or home equities, those can be good if you don't need the income-based repayment plans or you're just not in a field that'll be eligible for forgiveness. But one thing to note, though, is there's no prepayment penalty on any student loans, federal or private. So a lot of people will refinance out of federal loans and into either private loans or like a cash out refinance mortgage. But you have to understand that federal loan door locks behind you. You cannot go back in. So if people want to use a cash out refi or home equity loan, I often suggest them start with a federal loan or even a private student loan, because you can always use the mortgage to refinance out those loans, but you can't go the other way.
Right.
Got
that. Where do you see the industry going with, new administration, lots of different changes? Where do you see the industry of college educations paying for everything, and what you do to help people work through this college process?
Yeah, there are. In fact, I do a lot of content on my own. I just recorded some content discussing this very point. As we're recording this, the proposal has passed the House Workforce and Education Subcommittee, outlining some of the changes that are proposed. And so some of the changes include limiting the amount of Parent Plus loans, which are the loans that parents can take, from really an unlimited amount down to $50,000 aggregate, which at a lot of these private colleges doesn't even pay for a year, right?
No.
And so, and there are some other changes and changes to repayment plans and things like that. But the bottom line is, if these proposals pass as written, it will substantially change the landscape of higher ed financing, with really the exception of the most expensive schools, right? Because again, there's so much demand. But the reality is, if you limit the amount of federal loans that families can take, and remember, federal loans don't have credit underwriting criteria, basically, and you force them into private loans, okay, or some other mechanism, well, that's all well and good. But if families have, even high income families, if they already have the big mortgage, if they have a couple car loans or maybe their own student loans from the past or credit cards or whatever, they might have a great credit score, but they might not have enough income or room on that debt to income ratio to still be able to borrow for college, right? So that's going to be a major wake up call for families. And so really what that means is families generally will have to start saving a lot earlier to build up the savings, so they will need to borrow less or none at all. But with the state of the world, and inflation and everything else, as it stands, a lot of families don't have that ability. They don't have the extra cash flow just laying around. Say, oh, I'll just save extra.
Because everybody lives paycheck to paycheck right now.
Right. And so managing your finances much more holistically and be able to lower the mortgage payment if they refi, get a lower rate, or go back out to 30 years, let's say, becomes that much more important to build the room and the cash flow to be able to then save
Right.
for
It's
college.
actually looking at the full picture
Right.
so that you can see where all your debt is going. So that you can restructure some things. And the nice thing is that people do have a lot of flexibility right now to restructure their debt. And
Right.
they have to realize that maybe they're going to lose the 3 or 4% interest rate, but they're not paying the higher credit cards or something else to make sure, or this car loans to make sure that it's all together. What advice do you use every day?
The advice that I use every day, and this was told to me a long time ago. It just took me a long time to follow it. Do the things you enjoy or are good at and outsource everything else.
Right. Delegate.
I'm much better about it, but I'm still even not that great about it. And I'll give you a perfect example. And it's not even business related, but um, I used to have a much bigger house with a much bigger yard, and I used to mow my own lawn. And it would take me a long time to do it, and I hated doing it. And like I hated doing it. But then if I hired a kid to mow my lawn, I would then feel guilty because I was spending money. But then it took me a long time to shift my mindset to think like, okay, for the amount of money I'm paying the kid to do it in the
You can
neighborhood,
make a telephone call.
I can be doing so much more, or just like relaxing and de-stressing, right? Or spending
Right.
time with my family, whatever, right? But I used to feel so guilty about it. I'm kind of over that hang up now, although I still get the flashback. I mean, you know.
Yeah. So
I'm sure you know what I mean.
yeah, I totally do. So what are the 3 top colleges in the United States that people should look at?
I think everybody always goes to sort of the brand names, and those are really good. Okay. And my alma mater, while I'm wearing this, so I grew up in Massachusetts. My alma mater is University of Texas at Austin. I loved it. It was awesome. Although it's a public Ivy today. And if I had to do it all over again, I would still want to go. I would never be able to get in. Okay.
Right.
It just wouldn't happen. But I would say, instead of naming sort of names, but there are so many great institutions around, smaller private schools that you may not be as familiar with, but they have phenomenal programs. They have the internships or internship requirements, great professors, and their kids still get jobs, right? It's not like you only get jobs if you go to the Ivy League or University of Texas. That's not true. Kids get everywhere. It is really about what the student does with the opportunities while they're there. And every school is going to offer great opportunities. So, so I can't tell you how many times might suggest a school and the parent be like, well, I've never heard of that. And they sort of look at, sort of have a disdain for it. People really need to kind of get over that a little bit.
Yeah. So I think that getting help is super important. I will tell you that my son went to the University of Alabama, absolutely had a great time. My second one followed in his footsteps and was like, I cannot stand it here. So after 2 years, she transferred to Penn State, loving life right now in her state school because we're in Pennsylvania. And it's just so funny. I don't think that right off the bat, she would have gotten into Happy Valley main campus, but by transferring, she did. And it's just really having the hindsight to know where you will, flourish and not have the leakage, like you said, understand the financing, know what the curriculum and internships are, everything that you talked about. I absolutely love that you're really coaching up these kids to know how they're going to be a great adulting, because that's definitely a change.
Right.
And knowing that the finances can fit in it with whether you refinance, whether you get a federal loan. So Jack, how can people reach you if they want to get in touch with you to chat with you about next steps?
Yeah, best way, actually, I encourage everybody to subscribe to my podcast called The Smart College Buyer. You can just look that up. I'm on all the major platforms. I do a lot of podcasts and sharing information. I also have guests on to talk about different aspects of the college process, or connect with me on LinkedIn. Again, Jack Wang, Wang, Smart College Buyer. Or people can email me, Jack at Longhorn, Texas.
Okay.
Longhorn fin, short for
What's that? Bat?
longhornfinancial.com.
Yeah.
Yep. So, but I will say this too, just sort of one of the biggest overlooked factors is food. Um, because 4 years is a long time to go with bad food, and there's schools that also handle food allergies better than others.
Oh yeah, absolutely.
And people like don't think about it, and then their kids get there and they're like, oh, mom, dad, there's nothing here that I can eat, or blah blah blah, whatever. And that contributes to transfers as much as anything else, and so people don't think
Yeah.
about it. I'm like, you gotta, I mean, not only do you have to like it there, right, living, you have to like the food.
Yeah, no, I totally agree. And I love everything that you talked about. I think it's something that we don't talk about enough. We all have children, for the most part, going to college at some point in time. And thank you so much for being on Grab Your Keys. Everyone, if you would like it, then share it. And I look forward to seeing you next time on Grab Your Keys.